How's everyone doing tonight? Good. Thanks for coming. Well, I'm really happy to see everyone, and I notice again we have a lot of really new faces, which is always nice. And I'm happy to tell you that we have EcoTuesdays going on in this moment in 6 other cities across the country. Really great conversations about sustainability and great products and services that we could bring out to the marketplace that will just improve everyone's quality of life. And without further ado, I'm going to introduce our fabulous, wonderful speaker. This is Paul Herman from the Hip Investor, everyone.
So, raise your left hand if you like to do good. All right, sounds good. You can raise the glass too. And raise your right hand if you like to make money. Very good. Now raise both your hands if you like to do good and make money. All right, anybody not? There's always one or two. But I've had people who say, I actually don't want to make money, I just like doing good. That was a Stanford graduate student. And then we've had a few bankers slip in where they just want to make money and not do good. Radical concept. Because we come from a world of social investing, where you actually kick out companies who don't do good. What's a human problem that needs to get solved?
Poverty.
Poverty. Okay, so what's another human problem that needs to get solved?
Energy.
Energy. So earth, sustainability with the earth. What's another problem?
Sanitation.
Sanitation. Okay, having healthy environments to live in. Any other human problems?
Healthcare.
Healthcare, also a very important one, both physical and mental health care.
Clean water.
Clean water, okay, another health and earth issue.
Oppressive regimes.
Oppressive regimes, so building trust and equality. So what we focus on at Hip Investor, and we're a financial firm that also helps companies, help advise companies, but we mainly focus on investing, is solving human problems can be done for profit. So large companies can solve human problems for profit. How about in wealth? Building up economic independence, solving poverty, microfinance. Bank called ICICI focuses on microloans, solving human problems for profit. ABN AMRO is a European bank that's in that business. Citigroup is in that business. Even Walmart is getting into the business of solving the unbanked. How about in the earth space? What's an example of solving an earth problem? Anybody?
Drought.
Drought. Okay, so water efficiency. So equality, that's another one. How do we create opportunities on a gender, ethnic, income class basis? Finally, around trust. So there's 2 different ways I'll tackle this. First, a little bit easy. Who's here has heard of progressive insurance? How do they convince you that it's cheap?
They give competitors quotes.
They give the competitors quotes. They list their competitors' prices on progressive.com to show you that they're the best. This creates transparency. This creates trust with the consumer. This creates credibility. So when you solve a human problem, you profit. And this makes business totally exciting. And if you blend the 2 sectors, if you blend the business sector and the social sector, you can actually solve human problems for profit. You can generate human impact and profit. And that's very hip. Okay. We actually found 5 characteristics of setting this up in a company. Anybody want to guess what any of the 5 are?
Trust.
Trust, okay. So trust can be built into decision-making systems like resource allocation or budgeting. Any others?
Team building.
Team building, okay. So not only at the top, but at the bottom of an organization. And how do you line up the performance measures, which is a 3rd characteristic? Map those performance measures into the financial systems. And then what's the big picture? What's the main thing you need at the top?
Leadership.
Leadership. So you need a vision. So we've taken this methodology of the health, wealth, earth, equality, trust, along with the vision, systems, financial alignment, accountability, decision making. And what we've done is we've analyzed 150 companies over the past 2 years, including the S&P 100, through our little HIP team here. And so what we found is that when you have higher quantifiable human impact, and you have high management systems outperformance, which on the upside is twice as much, and which on the downside, when the market falls like this year, it falls 10% less. So that actually, in financial terms, creates alpha, superior outperformance. And so we have the HIP 100 index, which does this. And so it's very exciting. So you're like, all right, well, how do I know that's true? Well, one of the ways you know it's true is Goldman Sachs, who still is reputable, at least in my mind. And so they're putting out a 185-page report, internet to GS for Goldman Sachs Sustain. And they're showing how leading companies are being sustainable, delivering profit, having high management quality. So then let's look to the academic side. The MIT and Wharton professor did this study. And you actually track the financial performance, the shareholder performance. When you buy the companies that go on the list, you can actually buy them at a discount because Wall Street is not factoring in high employee satisfaction into how they value stocks. And when you accumulate that portfolio over time, you actually outperform the market, partially because you buy low. If you look at greenhouse gas efficiency, which a firm called Innovest does, and they really dig in on this and look at how eco-efficient they are, they outperform the market by another 20%, 20 percentage points, 2,000 basis points. And when you look at the boards of Fortune 500 companies, so Fortune 500 company board could have 8, 10, 12 people. If you're a top 25% performer, top quartile performer for a Fortune 500 company, how many women are in your board? 2. Anybody else? Two and a half is actually the break point. 3 is you're in the top 20%. What do you think the financial performance is for companies that have more women on the board, meaning 2? It's 53% higher. You earn 13% profit, return on equity, versus 9%. Correlation, causation, who cares? The reality is these companies are better run, more forward-looking, they better address their risks, they're more inclusive, and so we should be testing how many more women we want to get on those boards of 8, 10, and 12 people. You will see that those companies that have long-term high profit margins embrace sustainability. These are the companies who are identifying what the real core needs of customers are. And so this is the second reason. They see that health, wealth, earth, equality, trust will create new products, new margins, better tax positions, putting solar panels on retail chains like Walgreens in New Jersey and California to take advantage of the tax benefit. And then third is that these companies are human and that they understand that being human is naturally profitable. Think about how you vote with your dollars. Think about it as a consumer, think about it as an employee with your time, and think about it from your portfolio. So buy products that make sense to you. Use tools like the Good Guide, goodguide.com. Start projects that have a positive financial value, that showcase sustainability. So take the initiative, do it yourself. And then from your investment portfolio, pick a bank that supports making these types of investments, like New Resources Bank or Wainwright Bank or Self-Help Credit Union. Finance, like Kiva and Prosper and Microplace. And look at your stock portfolio and reward the companies who are being transparent and sustainable, because those are the ones who will reward you with more profit. So that's a quick overview of HIP Investor. Go to hipinvestor.com to learn more, and happy to answer any questions.